Good afternoon, everyone. It's Nate G. I am going to do a quick session on the third of the selling premium type trades that I've been taking. We did a iron butterfly session on Tuesday. That's selling 0 DTE options on the SPX every day in an iron butterfly and trying to capture that theta decay that happens over throughout the course of a singular trading day. And then yesterday, which is the chart I have up here, we did a session on selling credit spreads, both call and put credit spreads, at around about 10:30 when we get a pivot in the market. As you can see, today's 10:30 credit spread. I should make this yellow because it's not in the green yet. And the put credit spread is not working at the moment, but of course it has until the end of the day. We just have to close up anywhere above the top end of that box, roughly. I'm playing these on the SPX, but I'm charting them on the SPY, just because I had started doing that before. So the third and sort of final theta decay type trade is the iron condor. And the iron condor is essentially putting on both a call credit spread and a put credit spread, and hoping that the value, the underlying stock or the indice closes between the two call credit spread and put credit spread. So, for instance, and we're looking at the SPY here, right? If we thought that, okay, the SPY, let's pull up the SPX because we're actually trading the SPX. There we go. Okay, so let's say we thought that the SPX is just going to go sideways into the close, or relatively sideways. We're not going to get a big pull. We're not going to get a big push up. You can put on a singular trade, so you're basically selling two options and buying two options, right? So you can do those at, I like to do them at, what did I do today? Let me pull that up here real quick so I can show you exactly what I put on today. And I've been putting them on at about 11 o'clock, and I've been kind of testing this same day purchase. I'm not recommending that you try that yet, but that's kind of the time frame that I'm trying in trying to set up kind of an automated strategy. So I sold this 57.45s. Let me get my box here. Whoops. And it's all in one trade. So I sold the 57.45s, and I bought the 57.50s behind it. Okay, so that's a call credit spread right there. And then on the lower side, I sold these 57.05s. Where are we here? 57. Whoops, way down here. 57.05. Let me go here. So I sold the 57.05s. I gotta redo my box here. 57.05. And I bought the 5700s. Okay. And what this gave me, so that was at about 11 o'clock. So that was sort of the midline at 11 o'clock. Going, so that puts us at midline about what time? At 11 o'clock, we were right here. Okay, so there's sort of our midline between those two. I'll get rid of this green one so it's not too confusing, right? So for this to be a profitable trade, I have to close anywhere in between these, or take profit due to theta decay if this just kind of continues to go sideways into the close. And what I got for this today, which was actually pretty good, the one thing you run into with an iron condor is usually your credit is smaller than your max loss, right? Your total risk. But in this case, it's still smaller. If this expires between those two credit spreads inside the iron condor, I can make 490 and I'm risking 510 is my risk. Okay. And that's if this closes anywhere outside of either one of those two, top or bottom. Okay. So this is basically a pinning strategy that the SPX will close in between these two. And at the time I put it on, like I said, I got a credit of 490, right? And my risk is 510. And I put this on at 11 o'clock. And because we're just sort of trading here very near the midline, this is already up $100. Okay. So I could say, well, you know, I'm only targeting $100 or thereabouts. I could take this off here, or if I think this is going to continue to range in here, you know, I can wait for that to get a little higher. Now, if you start to get closer to one or the other, that value will start to change. We're trading kind of right in the midline at the moment, so that's why it's already you know, pretty highly profitable. Well, not highly profitable, but profitable. The issue with this, which is interesting, yesterday's was a max loss because we kind of rolled into the market close yesterday. And my profit on that, I want to say it was like, you know, 340 was what I brought in, but my risk was like $780, okay, because of the IV and the options I had to put on and whatever. And it was hanging out in between for a while, but it was hanging out kind of low. And then right at the end of the day, it rolled off and closed like in between these two strikes. So it wasn't a full 780 loss, but it was pretty close. And the lesson there is, as you get into the last hour of trading, it's always kind of a good idea, if you've got some decent profits and you start to get close to one of these you know, wings or brackets, sometimes it's a good idea to just take your profit and not risk, you know, that rollover or push up or whatever. You know, that last hour of trading can sometimes have quite a bit of volatility. So that's the iron condor, and I've been putting those on at 11 o'clock every day at the midline being price, whatever price is at that midline. Does anybody have any questions there? And what's interesting is, and I've been just letting these do whatever they're going to do for the day, because this is like the third strategy, and they are coming in at about a 62% win rate so far, but the profitability is near scratch, because generally your credit is about 300 and your risk is about, you know, let's say 700, right? So even though you're getting a 62% or 60% win rate, let's just say, and you're getting, you know, $300 for every win, and you're getting smoked $700 on every loss, it's coming out to be, it's still profitable, but it's a little scratch. So what I'm working on is, you know, when do we take these off? And and sort of what the profit and loss stop losses are, right? And so as I get more, it's a little inverse on the risk reward. Right now, right now they are 20. Actually, let's see. Each one of the wings is 5 apart, and then they're 20 from the midpoint. Yep. And like I was explaining in yesterday's session on credit spreads, is theta decay happens, on kind of a, if this is your trading day, right? And theta decay decays off pretty slowly through the morning, and then really starts to ramp into the close, right? So even though I've had this on since 11, I'm only up $100. But in the next, 2 hours, this would really start to ramp off quickly. Which would then, if we're still trading in this zone, the profit starts to go up quite a bit. So it's really a theta decay capture situation. Yeah, so to put on an iron condor, this is the 5745, okay, call, and this is the 5750 call. Okay, this is the 50. What did I say it was? 5705. Put, and this is the 5700 put. And now as you set this up, sorry, that's not an R, that should be a P. I am selling the 5745 and selling the 5705, and I'm buying as protection the 5750 and buying the 5700. This is an iron condor, that's correct. I did a video on an iron butterfly on Tuesday, which is up on YouTube. And this is actually set up as one trade. Okay. This is basically a $20 wide iron condor. Right, and you can stretch these wings too, you're going to get a different risk reward. You could go 10 wide if you wanted, that kind of thing, but your risk reward is going to change. So this is a 20 wide with a 5 wide spread, 20 wide iron condor with 5 wide spread. And then we just wait to see what happens with these, and then we manage as needed, right? So you can take these off early for small profits. You can have a max loss of 25% of the credit that was given. I don't have any rules set up on that. Like I said, my tests have been letting these expire. I'll manage them sometimes into the close, but as soon as I come up with a little bit better rules for profitability, I will do another video on it. But that is how to trade the iron condor, which is just another great way. Today's not the best day because it's a sell-off kind of day, and we just can't really get any buying. These work great. Whoops, let me close that out. These work great on days like this, right? When we just kind of go sideways and go nowhere. Those work great. So does the iron butterfly on days like that. So, any questions? The signal I look to put this kind of a trade on is, when I'm looking at the VOLD and the advanced decline and I'm trying to make sure that we're not going to have a trend day. And as long as it's not a trend day, then I'm going to put them on. Today we weren't getting any indication on the Vold and the advanced decline that we were going to have a trend down day. And I guess technically this isn't a trend day because we've pulled off and now we're just kind of going sideways into the close. So if I'm getting an indication that we're going to have a trend up or a trend down day, all of these theta decay type trades, the credit spreads, the butterflies, and the iron condors, I'm staying away from and just trying to play, like a sniper, just straight calls and puts on a trend day. Yeah, it's Mike. It's either max gain or loss, unless where was the SPX that I was just showing? Unless you close like right in here, like in between the one of these two $5 wide portions of the credit spreads, then it can be kind of minor. The profile for one of these looks like this. Okay, so you've seen an option thing. This is your max loss. Let's say that's $700 and $700 on this side, right? This is your midpoint, and then you've got your profit line like right there. So this would be your $300. And if as you come into these levels here, which are kind of this and this, right? If you happen to close in here somewhere, you're going to be on this really sharp downward angle. Maybe that's $50. Down here is $200, minus $200, but it's not a very wide. Anything you close in here is clear plus 300. Anything you close, south of that or above it is, your max loss. If you let it go to full, if you let it just expire. So there's a little bit of a ramp where you can kind of, still make a little bit of profit. It's less, like a iron butterfly has more, something like this. Right, where there's more of a ramp in which you can make $50 or $20, or if you don't pin it exactly. This has a wider max profit area, but the max profit is significantly lower than if you were doing an iron butterfly, where this would be like $1,500 or whatever. Any other questions on that? Gary, you can do that. Some people will do an iron condor at the open, based on with their strikes at what the expected move is. That's another strategy that people play. You can also play these. I did 2 days ago when I was talking about the iron butterfly at like 2:30 p.m. So you catch that that downward ramp in theta decay. You can also do that with a little more conservative play would be an iron condor at about 2:30. And because even if you drift away, if your iron condor is wide enough, you're going to catch that quick theta decay, and then you're not really risking I mean, you are always risking, but you just have a little bit wider of an area for which, into the close, the SPX could ramp up or sell off, and you're still going to be within your max win window. But like I said, your risk reward is pretty skewed in an iron condor. You're risking two or three to make one. But it's a more it's but it's but it, even though you're doing that, it's a more conservative play, which sounds a little counterintuitive, but that's kind of the play there. Yeah, so I'm doing this, trying this at 11 o'clock. That's the one I've been testing into the end of the day. I have not been testing the Iron Condor at like 2:30, but kind of that two to four time frame, and even 2:30 to 4, that last hour and a half of the day is when theta kind of ramps down the most, and you'll capture a lot of that theta decay. That being said, the underlying stock needs to stay kind of within that range. That's also when a lot of the volatility into the end of the day happens. So it's kind of a trade-off there. You do run the risk. It's quiet during the lunch hour right now, and so theta isn't ramping off quite as quick. But the name, the SPX isn't really going anywhere quickly. But when we get into that last hour and that ramp off is really starting to happen, that's sort of that risk you're taking. Is, yes, I'm trying to pin this somewhere, whether I'm using an iron butterfly or an iron condor, but there's a little bit more risk in the fact that it can move more in that last hour to hour and a half of the day. ETC, yeah, with a small cash account, the XPX is 10 times the SPY, so to speak, right? But there is the XSP, which is essentially the SPY, right? Roughly the same value, and you can this is cash settled, and there's no risk of assignment. So you can trade. I did an iron an iron butterfly yesterday on the XSP, and almost pinned the center. I was like 30 cents off, and you can trade one or two contracts of this, and depending on you can make $150 as a max profit, and if like on an iron butterfly your max risk is $70. So with a smaller account, you're not risking quite as much. Yeah, and you should be able to trade the XSP in toss. I know I can. So yeah, I mean, I can show it to you. Um, Hold on, so theta decay. I'll show you the chart. This is actually somebody who charted multiple. Let me see if I can find it first. Here it is. So yeah, here's a good example. So here's what theta decay looks like over a long, 90 days, 60 days, 30 days, and up to 0 days. So this is how theta affects your trade. That's why if you're trading, same week options or even two weeks out, it's going to ramp off a little bit quicker, right? So that's theta decay on on a larger time frame, and then this is actually an interesting graph of 0 DTE option expiration, and the red is the center line. This is same day from 9:30 to 4 of multiple strikes that kind of shows how that theta ramps up towards the end of the day. So it's a slow decline, from 9 to, probably about 1:30 or 2, and then you start to see it get sharper, and then obviously from about 3:15 to 4, it ramps off real fast, right? And so that's like why like 2:30 to 2:40 is when I'm testing those iron butterflies. Does that help? No, I cannot. I can't post an image in chat. I've tried. I mean, you can, if you'd like. Here, I'll put it back up here. If you'd like, you can take a screenshot and then clip it down and save it. I'll put that up there for a second. Yeah, just take a screenshot. No, MMK, an iron butterfly would be that I want only a little movement. I don't want much movement at all because I want to try and pin it to a certain price. Byron, I did a video on that called the Vold indicator, and it's a combination of looking at the Vold, the advanced decline, and how the ticks are reacting within the first hour of trading. Same with the Iron Condor. Any one of these, the Iron Condor or the Iron Butterfly, you want price to stay within a range. You don't want big moves. Unless you sell your Iron Butterfly 20 points higher, then you obviously want a big move. But we're coming into a double bottom here on the Qs and a potential double bottom here on the SPX. I wonder what's going to happen here. Are we going to break? Are we going to bounce? Who knows? What is the advantage of each? I just covered the advantage of the Iron Condor. The Iron Condor is you have a wider range of profitability, but you make less profit, and your risk is higher. The Iron Butterfly is a much better risk to reward. You can make quite a bit, but you have to pin it. Your range that the SPX needs to finish in is much tighter for that to be a profitable trade. And you can watch the video on that. That's up on YouTube. Here's what I'll do. I'm going to post this one here shortly after we're done, and then we'll have all three. So here is a link to. Hold on. Share. Copy. This is the link to the Iron Butterfly. This is the link to the credit spread. Let's see. Hold on. Let me go back. And then I will post the Iron Condor as soon as we're done here and I have a chance to put it up.